Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Dio, what's poppin'?
Bro, end of the year shit's popping.
Thank God.
You say that, and I usually say that, but I have not been like more busy.
Really?
Than I have the past couple weeks.
That's a
Yes,
good thing.
I don't know if it was like I took the week off for Thanksgiving, went up to Charleston.
Are you sure?
Had a great time. I had to think about that. I'm like,
Yeah,
where
I did.
was I? Was I in Charleston?
Yeah.
Was I in Charlotte? Was I in Charlottesville? It all gets confusing.
Right.
I was in Charleston, South
Charleston.
Carolina. Then I got back and I was like drinking from a fire hose. And then there was a day that I wanted to leave Friday at 3 o'clock, and Thursday night I was up till 11:30 working. And I don't know if that's because like the mortgage industry is that red hot, or maybe because I'm trying to launch 2 other companies while also working full time in my role at Waterstone.
Oh, yeah, and you're a dad and a husband, too.
Sometimes.
Yeah, there you go. Yeah,
Sometimes.
that's right.
I mean, sometimes they actually ask me to do things for them.
Don't you have some, like, old people's, like, softball, men's baseball league washed up thing you do every Sunday now?
Look, I'm either playing men's baseball.
That's what it is, men's baseball.
Men's baseball, or I'm at the barn on the horses.
Yeah, so
so
that's a full-time schedule, man.
It is a full-time schedule, but holy cow, yes. I'm looking at, what is today, Wednesday?
Today is Wednesday.
Yeah, and I've been on the go since 5:45. Yeah, and we're in the afternoon.
It is.
Yeah, I have an event with Home Lending Pal. You remember Brian
Yeah,
Young?
shout out Brian Young.
Yeah, they're actually going to be like rolling out their platform to the consumer.
What?
They have some lenders signed up to receive leads from Home Lending Pal.
Oh, so it's legit. It's
yeah,
go time.
It's go time.
Okay.
It is go time. It's time to put up or shut up.
Okay, shout out Brian Young.
So I'm going to go to a big kickoff event that they're hosting here in Orlando. Then wife and I have a date night.
Nice. Where y'all going?
So we are season ticket holders to the Broadway series at the Dr. Phillips Performing Arts Center.
Wow.
So we're going to go see the play called The Prom.
Have you seen that before?
Never seen it before. Nope. Have you? I don't take you as much of a Broadway person. Not that you wouldn't go.
Nah, I like the Orlando Philharmonic.
Do you really?
Yeah, I do like
I've never done that. Yeah, that's right. You're on to jazz and
Yeah,
stuff.
yeah.
Yeah, no. And then we usually like to go to, there's a really cool hotel in Orlando called the Grand Bohemian.
Oh, shout out
And
to Grand Bow.
Yeah, we like to go to the Grand Bow for dinner and drinks.
Nice.
And then we'll go to the show.
Nice.
So yeah, super busy.
Yeah.
I get to spend time with you today too.
I know. It's been a while, man.
And before this,
Okay.
missed getting him on the podcast.
Okay.
Tim Davis.
Tim, I heard you talk about him.
I talk about Tim. He's an old buddy from way back in the day. Hell of a speaker, really solid mortgage coach. And he was in town. He represents Movement Mortgage currently, well, and has been for a while, but I always say currently because you never know where the future's going to take somebody.
Right.
But no, he works over at Movement. He no longer originates loans, but he's a public speaker. I think he's like John Maxwell certified. And
Okay.
he was once a loan originator. He's a super funny guy and a great speaker. So the Central Florida Mortgage Bankers Association hosted Tim.
Nice.
So yeah, me and Mike Smalley and a couple of our loan officers all hopped in the car together and drove 15 minutes to downtown Orlando. We had lunch. We networked with a bunch of our colleagues in the mortgage industry.
Nice.
I call it my friendly competitors.
Yeah.
And we got to see Tim, catch up with Tim, and then listen to Tim do his whole dog and pony.
That's a loaded Wednesday for you today, Dustin.
Yeah, and hopefully I will be able to get Tim to do a podcast episode with us in January because you and I are going to be in Nashville, and Nashville is Tim's home city.
Well, you spoke.
So when we're in Nashville, we're going to have Tim on.
Yep.
And we're going to have, I'm going to this dude, Jesse DiGiacomo.
Put it out
So
there.
Jesse's, no, I already talked to Jesse. He's like, yeah, bro, I'm all in. Jesse's one of my favorite people in general. Just hell of a nice guy, funny, endearing. But homeboy closes 500 units.
What?
A year.
No, he doesn't.
500 units a year, and he manages and coaches other loan officers. Yeah. So he's also a really badass mortgage professional.
Wow. Yeah.
Yeah, so already kicking off 2022, we're going to have some really awesome guests just from the jump.
Queued up, ready to go.
From the jump. You know what I have noticed, though,
What's that?
is the episodes from like 2 years ago,
Back in
not
the day.
20 months ago.
Yeah.
We could have done better.
Yeah. I mean, for the time it was, we were, but we're here now, so we have the opportunity to go back and remaster them.
Yeah, well, you have to start somewhere, right?
Got it.
Yeah, so what do you think about taking one of what we think our better episodes are,
Okay.
and let's redo them?
Approved.
Approved?
Yes.
So after this episode, let's go ahead and kick a redo.
Redo. READUAX, AUX or something.
Yes. Yeah, let's do a redo. Which one should we do first?
12-week challenge, bro.
12-week challenge.
Yes.
Yeah, because we get some feedback like, I think I like that one, but the audio was kind of off.
Oh, yeah, that was way off.
Or you guys seemed nervous because the cameras were on.
Jittery.
Yeah, John was stuttering. You guys are making weird noises at the end of it.
Yeah.
You didn't have the right intro.
Right.
Okay.
That's
Yeah.
okay.
But today's episode is going to be a new one.
Yes.
And it's going to be a little bit of a viewer request.
Yeah.
It's going to be mortgage related, but it's not mortgage related.
Really?
So, hey, my realtor friends, my just everyday consumer friends, those people who think at one point in the next 5 or 7 years, you're going to want to purchase a home and you need financing.
Mm-hmm.
Or you're going to know someone, a family member, who's going to want to purchase a home and needs financing.
Mm-hmm.
This episode is for you.
Nice.
This is one of my favorite episodes. It's a both.
Okay.
It's a both. Hey, whether you're internal or external, are you in the mortgage industry and real estate industry, or are you outside? It doesn't matter.
Doesn't matter.
This one's for you.
Okay.
We've done episodes in the past on things like budgeting. Mm-hmm. That's an everybody episode.
Everybody.
We've had interviews with Ty from EA Sports.
Shout out Ty.
That's an everybody episode.
Everybody.
Toby Moyle, everyday everybody episode.
Yeah.
Laura Hartman.
Shout out Laura Hartman.
Yeah, I mean we have plenty of episodes that are that way, and we do have some that we lean into
Geek out, as you call it.
Geek out into the mortgages. Yeah. Yep. But today, what is that request?
We are talking about non-QM lending.
What does that mean, John?
Well, you taught me it's, damn it.
Non-qualified mortgage.
There it is.
QM stands for qualified mortgage.
Okay.
If we were to go back to 2010 and we were to look at the Dodd-Frank Act and then the regulation that came through that act, everything from loan officers' compensation was regulated to the documents that we used were changed. Something that was put in is they made a definition. What is a qualified mortgage? And then does that particular loan meet ATR or ability to repay? Because after living through the demise, the crash of 2005 and 6, and all the loose lending that led up to it, what they realized is lenders were creating loans. And by the way, lenders don't necessarily create loans. Wall Street. Investors create loans. They ask lenders to make them. And lenders are like, hey, if you're willing to buy this,
we'll make the widget.
We'll make it. Yeah. Whether it's good, bad, or indifferent, we'll make it if you'll buy it. Yeah. Well, Wall Street wanted it. Lenders made it. Sometimes lenders made it and then sold it to Wall Street as if it was something better than it was, and Wall Street bought it. Right? It goes both ways. Right? There was stains on the hands of all parties involved.
Right.
Realtors, including you, builders, including you, like everybody, consumers, including you. We all were at fault for what transpired and led to the Great Recession.
Okay.
So coming out of the Great Recession, like, okay, we need to put some guardrails up. And those guardrails are, let's define what is a qualified mortgage. Well, a qualified mortgage is one in which the loan balance cannot grow. Okay. It's one in which the payment is principal and interest. It's one in which we verified income and assets. Right? It's like, no, we actually verified that this person works where they say they work. They make what they say they make. We made sure we put them into a loan program where it's a principal and interest payment, where the payment can't grow, where there's not a balloon at the end. Mm-hmm. And then we put in various disclosures that when read, safeguards them meaning the consumer, against being taken advantage of, against the bait and switch.
Now, when you say this, the first thing my mind goes to, because this is all I know at entering the mortgage industry. So you're saying like prior to like 2000, let's say 2006, it wasn't like that?
No. Little old ladies could be sold a mortgage interest rate that was a variable rate, that the payment was what they call negative amortization, meaning if you just paid that 1% rate that the loan officer sold you on, after a year, if you borrowed $300,000, you now owe $310,000. After 2 years, you now owe $322,000.
What?
Yeah, the amortization, instead of you making a full principal and interest payment, you made a portion of an interest payment, and then the interest then grew.
Wow.
Yeah. So yeah, there's a lot of stuff.
Gotcha.
Like we used to have what we jokingly call the mirror loan. If I put a mirror underneath your nose, if I saw a fog, that meant you're alive.
Yeah.
Hey, John, sign here. Here's a mortgage.
Really?
I didn't verify your income, didn't verify your assets. Possibly pulled credit.
That's insane.
Yeah, made sure you are who you said you were. And
off you go. Off
you go.
Wow, okay.
Yep.
Okay.
Like technically, I bought my first house on what some would deem a subprime loan. Now, I would call it alternative A or alt A because I had a 680 or better credit score. But I put just 5% down and I never verified anything. It's called a no-doc loan.
What?
No doc loan. My loan program was a 6-month adjustable rate mortgage where I only was required to pay interest.
Wow.
I still own that home.
Okay.
I have tons of equity in that home.
Right.
I've never missed a payment on that home. It wasn't a terrible loan for me. But I was also a savvy, at least then not quite savvy. Today I'm savvy. Back then I was like a wannabe savvy person in the financial industry.
Gotcha.
Okay. So this is a long lead up to talk about non-QM loans. So we know a QM or qualified mortgage for the most part. Fannie Mae, Freddie Mac, conventional conforming loans. That's a QM loan. FHA loans, QM loans. USDA loans, QM. VA, QM. It's a qualified mortgage, right? It is. There are parameters. Income is verified. Assets are verified.
Yeah.
All well and good. But we do have non-QM lending. And non-QM loans are loans in which we only need your bank statements to qualify you, John. I know if I received your tax returns, due to your accounting practices, and I use air quotes when I say accounting practices, you wouldn't qualify. But if you can show me 12 months of bank statements and I can look at how much money you're depositing on a monthly basis, there's a mathematical algorithm I can use and count that as income to help you qualify. Right? Bank statement loan.
And it's called a bank statement loan. Do they call it that?
Yeah.
Okay.
It's called a bank statement loan. Yep. There's a non-QM loan could be deemed a loan for somebody where maybe you're not a citizen of the United States. Maybe you do not have a visa. So you're what we call a foreign national. Okay. Well, you're not going to, as a foreign national, you're not going to qualify for VA, FHA, USDA, or Fannie Freddie conforming conventional. So then we have to look for a non-QM loan. You may be borrowing a money for a home, but that home is technically a condo-tel. A condo-tel is halfway between a hotel and a condominium. Well, it doesn't qualify for condominium financing for all of those other agencies I listed, but you can do one with a non-QM loan, right? There's a lender or lenders out there that will still underwrite and fund a loan for you. A big one right now is what's called a debt service loan. Right? Debt service loan would be if you are a real estate investor and you wanted to purchase an investment property. Instead of qualifying based on your income and your assets and your debt income ratio and your loan to value, this particular lender or lenders that do these types of loans, what they'll look at is how much are we lending you and how much is the home going to rent for? And if the rent covers the payment, we'll do a loan for you. And this is, by the way, I'm simplifying this for everybody, right? So these are all called non-QM loans. And I'm sure there are other examples that I'm missing out on, right? These are unique, outside of the box loans. What I want anyone who's tuned in to do is listen to the next 5 to 7 minutes. The next 5 to 7 minutes is what you really need to know about a non-QM loan. Whether you're an originator, whether you're a realtor, and whether you are a consumer who is going to try to take advantage of one of these loan products to qualify.
Sounds good.
Okay. Let's start with the most simple. You're not qualified.
Okay.
You are not qualified.
Okay.
But we're going to try to obtain financing for you. So you don't meet the standard that was set forth by our regulators. It's not a hard no. It's a no for that, but there's hope. But please know, it's a hard-ass loan to do. And not many originators do enough of them consistently to be experts at them. And that loan is typically a loan that is being brokered out to a third party, whoever that lender is, whether it's Angel Oak, whether it's Oak Tree. Something about non-QM lenders, they love oak. Whether it's Citadel, whether it's AFR, there are a plethora, and I say a plethora, probably a dozen, and a half a dozen that are the mainstays, lenders that will purchase or partner with other banks and other lenders to underwrite, fund non-QM loans. But I think it's paramount for anyone to know going into it, you're not qualified. Set your mindset at that so that you're not thinking that, oh, well, this person told me I'd be able to get this loan. This person said you're not qualified, but there are some avenues that we can explore And based on my research, I think there's a good chance we can obtain financing. And the reason why I want to change someone's mindset like that is for someone who helps run a mortgage company, right? Where we fund hundreds of loans a month, right? We fund hundreds, almost billions of dollars a year just in our region, mortgages. What I can tell you is 95% of every loan that is being originated, and let's just say 90 to be safe, is a qualified mortgage. Right? When it's qualified, you know your rules, you know your regulations, you know your guardrails. You have a check sheet, you check through it, and you're like, yep, you're good. And when you're good, you're good. Like, you're good 99.8% of the time, you're good. When you're doing a non-QM loan, you think a lot. You don't know. You think. And it's like, okay, you're not a part of that 95%. You're now trying to fit into the 5%. And by the way, that 95%, there's only like 5 or 6 programs that we in the industry use for those 95%. On the non-QM sector, there's like 12 to 15 different loans that you're using to try to pick up 5% of the available business that's out there. So if you're an originator, I think it's good for you to know that these loan programs are out there. I don't know if I would advise you to become a non-QM expert. Yes, I know that my friends in non-QM are going to hate me for saying that.
Yeah, I was going to say, so there are some people that just specialize in non-QM, just like other people focus on builders. Some people do XYZ. There's some. Could you say, is it sustainable to just like I only do QM, like non-QM loans?
No. I mean, outlier. Like, I know we had the book Outlier. Shout out to Malcolm Gladwell. It's a hell of a book. It's one of my most recent reads, and it's sitting on the table today as a centerpiece. Yeah. This is going to sit up here, ladies and gentlemen, boys and girls, until you send John and I either suggestions or
alcohol.
Well, it doesn't have to be alcohol.
Okay.
I think it'd be really cool. Whatever you send us, if you put a note, hey, please make this the centerpiece, we'll do it.
It will appear.
And we'll give you a shout out.
I will.
But no, John, those are the outliers.
Okay.
I don't know many top producers that are even willing to do a non-QM loan, which is crazy because people who do what I do on this podcast, but in other platforms, and maybe it's because they're getting paid by non-QM companies, they're like loan officers. If you want to increase your business, you need to look into non-QM. And I'm like, I don't know.
Okay.
I don't know. Maybe you need to have a really good resource in your local market where you can kick all your non-QM loans to so that you can run out and find more of the 95%.
Gotcha.
Birds of a feather flock together, John, and I don't know if I want to sit back and try to do 2 or 3 non-QM loans when I could go out and do 7 or 8 QM loans. Right? It's a catch-22, and I'm not here to tell someone what to do and what not to do. I can just tell you the world as I know it, based on how I've experienced it since 2004.
In your experience, have you ever done a QM loan in your like personally? Have you ever handled one?
You mean a non-QM loan?
Non-QM loan.
No.
Non-conform.
Nope.
Wow. And you've done a lot of loans.
Yeah. I would normally refer that to someone in the branch who is a average to below average producer and would be grateful to have any lead.
Gotcha.
Right? And I would tell you that person is probably that way, either A, because they're new. And look, when you're new, there's certain things that you have to experience just to experience it. Right? It's easier for me to say, don't do a non-QM loan if you try to do 2 or 3 and they were all disasters. You're like, hell yeah, I'm never going to try to do one of those again.
Yeah.
Or, it's one that I refer. Yeah. Like it just, I refer it out and I set all the proper expectations. And my expectations as an originator typically go like this. I'm like, hey, John, look, I do a lot of loans every month, every week, every year, have been for the past decade. I don't do a lot of these loans. Like I just don't. I would be no different than working with a rookie.
Wow.
So what I'd rather do is I'd rather get you in contact with Tom or with Wanda because at a minimum they have experience doing this. And Tom and Wanda in my office are grateful for it. Like they do them, but I won't. And I'm grateful not doing it. And I don't even ask them for a commission split, right? Because all the time that I freed up on that lets me go out and build more relationships with people who fit. So it's consumers and realtors. Here's what you need to know, right? What you need to know is if you have a loan officer who's willing to do this loan for you, cut them a break, cut them some slack. These are hard ass loans to do. Remember, non-QM, you're not qualified, right? I want you to think that way so you can be grateful. It's going to be tough. It's going to be hard. Somehow the rules change halfway through, right? It's one of those things where it's like a moving target. Closing dates end up becoming a moving target. And the reason why is it's a loan that doesn't fit in the credit box. It's a loan that has very minimal interest by Wall Street and other investors. It's one in which the lender who's underwriting it may be making an exception somewhere. And it's definitely one in which that your particular loan officer, no matter how great he or she is and how much experience they have, more than likely, they're not closing 2 or 3 of these a month. More than likely, they're closing 2 or 3 a year. Maybe this is their first one. And imagine your first transaction, no matter what industry you're in.
Super smooth, right?
Yeah, if you're a dentist, right? My dentist friends always like to joke about the first time they clean someone's teeth.
Bloody mouth.
Yeah, like they felt terrible for the person.
Yeah.
And it gave them all the respect in the world for their dental hygienist. To where like my one buddy's like, look, if you ever go to a dentist and the dentist wants to clean your teeth, you need to get up and go find a new dentist.
Oh, right.
He's like, his hygienists know what they're doing.
Yeah.
They've done it for 10,000 hours. Right? You haven't done non-QMs for 10,000 hours. And realtors and home buyers, don't hold your loan officer like accountable for not doing non-QMs so many times that they're experts. There's not enough of them. There's just not enough of them out there, right? It's almost like what's a good, almost like, what do they call it? Not a wives' tale, but like legend, like an urban legend. Like think of an urban legend, like, oh, I knew a guy once who knew a girl who worked with a guy, and the lender screwed up their foreclosure. Now they own the home free and clear.
What?
They erased $3,000 in debt. Like, I'm not going to say that's a total lie.
Yeah.
But if that happened, that's a one-off.
Right.
Like, these loans, these non-QM loans, they will be sold to me, the originator, by the non-QM company. Dustin, you should partner with us. Look at all this business that you're missing. You could go out and you could build relationships with realtors because realtors want to refer you because now you can do the hard-ass loans. Okay. But just because you have that product and we have all the selling features, what's the odds that if one of my realtor partners or builder partners has one of these people, that they're going to meet all of the parameters and stipulations that you set forth? Because it tends to be an all or nothing. And if it's not all or nothing, then I have to submit for a request. So I'm taking a non-qualified mortgage. Now I'm asking for a request and doing something that I'm not proficient in. I haven't done it 100 times, 200 times, 500 times. Maybe if I'm lucky, I close 5 a year. I'm going to try doing anything 5 times a year. John, you like to golf, right?
Yeah.
Are you better at golfing when you golf 5 times a month or 5 times a year?
5 times a year, a month.
Yeah. The more you golf, like certain things will get better. Your chipping and your putting definitely is better by playing golf once a week. Not necessarily your driving, because I've seen you drive.
Yeah, I've gotten much better.
You should stick to the iron game. Okay.
I switch now, flip flop.
But in general, anything you do, the more times you do it. So I think it's just, you should know, what is a non-QM loan? Yes, they are out there. Yes, they are difficult. If you're an originator, you have to ask yourself, how many hours are in the day or in the week? And if you choose to take on one of these loans, are you setting proper expectations? Does everyone know that you're not proficient at doing one of these? Does everyone know that it's going to take 3 times as long? Do you know it's going to take you 3 times as long? Are you willing to work in the extra hours so that this one loan doesn't jeopardize all of the green time you should be facilitating? By green time, I mean prospecting, making sales calls, doing marketing activities. And then if you are the borrower and someone has agreed to try their damnedest to get you qualified on a non-QM loan, cut them some slack. It's going to be hard. They're going to put you through the ringer. Like, this is a loan product that doesn't fit in the box. Everything about it is an exception. So it's not easy peasy mac and cheesy. Same thing for the realtors. You should know what type of loan is your buyer receiving. What type of loan is it? If it's a non-QM loan, bank statement loan, debt service loan, loan 404 national, it's great that someone told you, yeah, we can do it. But did they tell you we could do it well? Did they tell you that they could do it with ease? Did they tell you they could do it and with expected timeframes? Mm-hmm. Or did they say, hey, look, all of our research indicates that this loan is one that's going to go through their system, and very well may be a train wreck, and I very well may need a contract extension. But the good news is, and this is the good news, and I don't want to throw non-QM under the bus because it has its place.
All right.
We're doing a loan for somebody. No one wanted that loan anyhow. People wanted a home. We're helping someone get into a home where if we didn't have these products, the answer would have been no. Mm. At least the answer isn't no. The answer is maybe, I'm pretty sure, I think. Look, if I'm doing a QM loan, the answer is yes. Yes, I can do it. I've vetted you. I've verified income. I've verified assets. I ran you through automated underwriting. I'm good to go. Mm-hmm. With a 99.8% accuracy, I'm going to get your loan closed. On a non-QM loan, say, hey, I've done all my research. I've called my account executive. I've reviewed what you sent me. Yeah, pretty sure, I think, I'm kind of confident, but it's more like a 75-25. Right? I go from 99.8 to 75-25. 75% sure all my research indicates that we're going to be good. Yeah. But what I don't know is how smooth it'll go through. On my QM loans, I know how smooth it's going to be. I know who my processor is, which one of my 5 underwriters is going to be, which one of my 3 closers is going to be. And if I need something, I know where to walk or who to call. Right. On the non-QM side, I don't necessarily have that. So I think it's just good to know. It is out there. There are these loans out there, but they somewhat can be like urban legends. They can sometimes be like, well, I heard of a guy who did X, Y, and Z. Yeah, they probably did. But do you know what hoops they had to jump through? Do you know how long it took? Do you know how frustrating it was? Or do you just know the end result? Because if you just know the end result and you're not willing to go through the hoop jumping and the stress, it might not be the best loan for you to originate. It might not be the best loan for you as a consumer to sign off on. I think that's what you need to know about non-QM lending. That's my take, at least. That's my 2 cents. Take it or leave it. I'd love to see your comments. Like, look, if you're listening to this on YouTube, by all means, yes, leave your comments. In the next 30 days, John Coleman and Dennis Miller are going to have tloponline.com launched. And on that particular website, there's going to be everyone who wants to consume content is going to be asked to register. Mm-hmm. It's free to register. And 2/3 of the content is going to be free. Mm-hmm. And I've seen it. I've legit seen it. It's pretty damn good. Yeah. Right? And then there's even additional content if you really want to geek out. We're going to charge you a small fee for that. Mm-hmm. And you can become a monthly member. But on that's also going to be a message board. Yes. Right? And we stole the message board idea from 2 places. The one of the places, though, is YouTube. Because we noticed people were using the comment section as a bit of a message board. Right. So let's bring a message board to the people. Mm-hmm. We can discuss non-QM. Who are the investors? What are some of the pitfalls? Yeah. That'd be a great place to take that conversation. Because I'd love some feedback on this. Yeah. Right? Because there's some people who tuned in are like, DO's full of shit, man. I close 7 loans a month and I'm a non-QM queen. Yeah. All right, cool. High five. I've just never met you. I look forward to meeting you. Nice. Maybe even interview you. Maybe we'll do a whole entire show on it. But someone had requested to do a show on non-QM. This would be my shtick. This would be my spiel. Mm-hmm. You can check us out on Facebook. You can check us out on TikTok. You can check us out on Instagram, LinkedIn. Please follow us. I love watching our followers grow. Yep. I love messages. I'll do my best to reply to all messages. If I can't get to it, John gets to it. Yep. Sometimes we actually tag team it. Yeah. Like sometimes I'll see he commented on YouTube. Yeah. I'll come right behind him in content too. Yeah. Spotify, Apple Podcast, 5-star reviews, thumbs up, shares, likes. We love it all. Yeah. We love it all. We ask you to engage. The more you engage, the more you like, the more you share, the more you tune in, the more you subscribe, the more we'll continue doing this. Absolutely. He's John Coleman. I'm Dustin Owen. That's all the time we have for you today, but we will catch you on the next episode where we redo the 12-week challenge. Deuces.